What's happening, traders? I want to go over my last trade that took place on Thursday the 13th with the core PPI news, which was basically like the wild west. However, the strategy allowed us to get in and make a tactical play, which was very low stress, even in a high stress moment in time, that allowed us to clean up for 220 pips. So let's just quickly dive into this. And I also want to point out two things that are becoming very clear to me that are going to play a part in every single trade that I take in the future, which I'll point out as we get into this video. So let's just look at the big picture straight away. We are in an uptrend. We have our break of structure here on the M15. We have our weak high and we have our strong low. So just keep that awareness in mind. And here we are, playing a counter trend trade. This massive move to the upside, I think was the 12th of June. That was FOMC news. That was crazy. They had so many news announcements between, I think it was 1:30 and 7 p.m. And it was just crazy. So we can see that we're moving counter trend to the current overall trend, which is moving to the upside, right? So noticing that, we've got our change of structure here. We also have this low broken where I took a previous trade there. But what's important to look at here and why I had this as my point of interest is that we are seeing liquidity above here, right? Which is just making itself more known to me with the amount of trades that I'm taking and seeing the ones that are successful and the ones that aren't, and the ones that really move at pace out of a zone in towards your take profit. So we had this break of structure. We are expecting a pullback. The news comes out at 1:30, pops to the upside. I had this as my point of interest and this zone up here as my point of interest. And we can see that there's a ton of highs up here that have not been breached. And just above these highs, we have our point of interest. So all I do, let me just take it back here just to save time. I went down to the M2 time frame, and as we can see, we play the event break. We wait for a higher time frame supply zone to be hit, and once that gets touched, we then go down to the M2. We look for the last demand that was in play before that area of supply got hit, and as you can see, it's this area of demand. The market taps into it. It doesn't just blow straight through it, which means we have our point of friction, which is so important. If there's no friction at all, then we won't bother looking at this area of supply to then take a short from. You get a hint of friction, the market just clears the low and breaks it and closes below. This then becomes our entry target. I go in at the 50% because the whole zone was around 60 pips, so there's no way I'm doing that. The max amount of pips that I want to risk on any trade is between 20 and 30 pips. I'm probably going to bring that down to 20 pips. 30 pips is just fine. And then my target for this was not this low because it always breaks the low and goes a little bit more. So I wanted to extract as much profit as possible and go for this low over here. And that's what my target was at 2301, which we came out perfectly for a 220 pip trade. Now, what I missed out on was the trade that I really wanted, that I think I saw about maybe since this move began, and it didn't come back to this contraction zone, which was a nice area of demand. And we can see that it hit this area of demand. As what we can see here again. You can see here again, we've got our liquidity, right? We've got our liquidity. This is becoming more noticeable to me every single day. And I'm thinking to really implement it in my strategy and maybe not even take a trade unless there's liquidity above or below certain zones, right? Comes into here, if we go down to the M2, we can see that I did have the trade sussed, but I actually didn't get into this trade. Why? Because my zone wasn't at this area of demand, it was at this area of demand, and I missed out on this trade by a pip, which is so frustrating as I was watching this since it left that contraction zone, waiting for it to come back to take this market back to the upside. And I think I missed out on like a 400 pip trade. No matter, gold is abundant. There is an opportunity every single day, no matter what time of the day. It is an abundant product to trade, and I absolutely love it.